a budget deficit occurs is when your expenses are greater than your revenues. That's a budget deficit. But putting that to one side, of course, the real question is, why is this happening to California right now? And there's a little bit of broader context that needs to be put into this conversation, because one of the things to keep in mind is that this is not a general economic condition. In other words, if I look across the United States, most states aren't having big budget problems. This seems to be relatively unique to California. And that's important because what it tells us is this is not a what I would call national cyclical situation. It's not driven by some sort of standard economic downturn, as you might typically think. Now, I appreciate that at the beginning of 2023, there are a lot of people saying the U.S. economy is going to go into a recession. I think we need to say right up front that the U.S. economy has clearly not gone into a recession. In fact, I'm going to go to the next step and tell you that 2023 was a great year for growth, both in terms of economic output growth, tight labor markets, wage growth, everything else. It was a great year. And that's just as true in California as it was for the nation overall. Yet, again, California has this $60, $70 billion deficit. What is going on, right? Because we like to blame it on the economy. Oh, it must be the economy's fault. And even the last LAO report on the budget deficit suggested that somehow or other California had some sort of localized recession, which is why we're seeing this budget situation. But yet again, no, that's not what's happening. And again, if you look at the numbers, yes, there's a slight uptick in the unemployment rate in the state. But every other indicator, where you're looking at GDP growth in the state, wage growth in the state, other measures of economic activity, whether it's airports, hotels, industrial real estate, everything tells us that not only is California continuing to grow, but it's actually growing a little bit faster than the United States in many different metrics. So our budget deficit is not a function of a business cycle. That's not what's going on. So what is going on? Well, to understand this, let's take a little step back and talk a little bit about a structure of California's tax base. Now, all states get their revenues primarily from four different sources: real estate taxes, sales taxes, income taxes, and corporate taxes, right? Those are the four big sources of revenue. And California is no different than other states in that sense. These are our big four as well. But when you dig a little deeper, there's a couple differences between California's tax system relative to most other states. For one thing, we're far more reliant on income taxes than other states are. In other words, we lean more heavily on that source of revenue and less heavily on other sorts of revenues, in particular real estate taxes. The next thing, of course, is when you actually look at personal income taxes specifically, you realize that what California has is a very, very progressive system, which is to say we have very high taxes on high income earners, very low income taxes on low income earners. And there's nothing wrong with a progressive tax system, but let's understand that what that means specifically for California. A big portion of our revenues in the state of California come directly from income taxes charged to high income earners. Most high income earners, of course, earn their money from, well, financial markets. It's capital gains more so than actual traditional income. And what that means is that California becomes particularly, I guess the way to put it is, exposed to asset price cycles. That is to say, when asset prices are going up, well, there's lots of capital gains. So when there's lots of capital gains, that's really good for the state of California. And that can come in the form of selling real estate for some big profit, or a nice IPO in the tech market will create lots of revenues for the state. Years ago, when Facebook did its IPO, they had to set up a special account just to get Zuckerberg's capital gains taxes from that IPO. That gives you a sense of how important this one revenue source is for the state of California. Now, I know it feels good to the left to soak the rich. This is something that our state kind of revels in at some level. But when you do this, you end up, of course, internalizing the big swings that we see in capital markets. That is to say, when asset prices are going through the roof, the state's making money hand over fist. And when that asset cycle comes to a close, as it inevitably will, well, then the state finds itself deeply, deeply in a hole. There's nothing new here. We've seen this before. We had the late 90s equity cycle. You remember .com, all that nonsense. Again, wonderful for California in the run up. When it blew up, threw the state into billion-dollar deficits. By the way, those billion-dollar deficits cost Gray Davis's job back in the day. Gray Davis was governor. He was held responsible for the situation. And of course, voters voted him out of office and brought in Arnold Schwarzenegger as his replacement. We saw the same thing after the Great Recession. Remember, we had that huge run-up in asset prices, particularly real estate prices, all based on that subprime debt. That blew up really starting in 2008, 2009. Again, just like the last time around, you saw California revenues absolutely plummet when the capital markets started settling back to normal. And at one point in time, the state was actually issuing script to its vendors. It had no cash. It was creating California script and paying vendors going, please take this because we have no money to give you. That's how bad a situation it was. So fast forward to 2021, the pandemic was fading. The U.S. economy was absolutely on fire because the Federal Reserve threw an insane amount of cash in the form of quantitative easing at the economy. Yet again, asset prices went through the roof, right? Stock market up, home prices went up 40% in 2 years. One of the greatest surges in home prices we've ever seen. And as always, just like the last two times around, this caused an enormous surge in California revenues. But again, only thing you had to do is look at 20 years of history to know exactly where this was going. In the beginning of 2022, I wrote an op-ed that appeared in Cal Matters where I said just this. This is obvious where this is going. The state's crowing about a $100 billion surplus. They didn't get a $100 billion surplus. That's not what was going on. What they got was basically 5 or 6 years of capital gains taxes all in 1 year. It was a one-time thing. Asset markets went through the roof. We knew at the back end, even if asset prices didn't collapse, the game was over, right? There was a bunch of years before the fundamentals caught up to allow capital gains to start kicking in again, to bring that revenue back to the state. The way to think about it is really simple. It's like your father is going away for 8 weeks, or your mother is going away for 8 weeks, and they say to you, look, I'm not going to be here. I'm going to give you 8 weeks of allowance, right now. I'm going to give it to you right now. Not every week the way I normally do. I'm going to give you 8 weeks right now. You really have to not spend it. You want to make this last for the 8 weeks I'm not here. And of course, what did our kid do? They immediately went out and spent every single penny of it. That is what the state did. They took that $100 billion surplus, which they should have known, a big hunk of that. They should have put it one side to cover future expenditures because those revenues were going to disappear. It was obvious. But of course, no one gets rewarded for being practical in Sacramento. You just want to spend every penny you can because that's how you get reelected. You don't care about what happens the following year. That's somebody else's problem as far as you're concerned, right? So they spend every single penny of it. And that's why we have this massive deficit now. So had they not spent the money, just saved it, we'd be okay. But they spent it. Now we have these huge holes and we have a big problem on our hands. So here we are in early 2022. The state is going on and on about this massive surplus, which again was never a surplus. It was just a bunch of years of revenues, all fast forwarded to the current year, right? And what did they do with the cash? Well, I still remember that the state legislative bodies, they wanted to spend everything. They wanted to spend every single penny of it immediately on expanding existing programs. And by the way, that's the worst thing you could possibly do. So Gavin Newsom stood up and said, no, I'm going to be the adult in the room, and I'm going to say that we're going to spend this money on one-time expenditures. And in the end, maybe half was spent on one-time expenditures. But again, let's be perfectly clear what we're dealing with here. It shouldn't even have been spent on one-time expenditures. We needed that money just to cover our existing obligations in the following years. So even the money that was spent on one-time money left us with a problem. But the half of it that went to, of course, expanding existing programs, this is where we really got ourselves into problems, right? I mean, an incredible expansion of spending on all sorts of different programs. Again, it must have felt really good in Sacramento to be increasing this program and that program and offering undocumented immigrants, health care and putting all sorts of money into our schools. And I get it. This is important things, and we're helping people, but we're doing it on the basis of money that's just not going to be there next year or the year after. Look, if you want to help people, first find the money, then spend it. If you spend the money and then you don't have it, you're going to hurt somebody. You're not helping, you're hurting. Because now there's a lot of people who are relying on these programs. Seems highly unlikely to me that the state's going to be able to expand its revenues sufficiently in the short run to meet this. And that means they're going to have to cut back dramatically. And a lot of folks who were planning on things they were going to get from the government are not going to get it now. It's just not going to be there for them. And that's almost worse than them just not having it in the first place. We promise it to you and then take it away. So what do you do now, right? There's two things you can do. There are three things you could do, okay? First thing is acknowledge you have the problem, cut back on all this spending, right? Cut back these programs. Again, get rid of all those things that were part of your priority, but acknowledging because we just don't have the money to do it. The other thing you could do is raise taxes and just say, look, we have this budget deficit. We got to make more money. Let's do it. And then the third thing is to pretend you don't have a problem and should just fudge like crazy. Okay. Now, the third path is exactly what we do every single time, which is why we were using script to pay vendors back in the day, right? I mean, that's, no one wants to make a hard decision. So that's where they'll mainly be. But this one's big enough that they may have to do something else. Question is will they try to raise taxes? Probably. But I can tell you, Californians don't really have an appetite for more taxes right now. The state legislative bodies are significantly left of the state population. We know that. It's obvious. And when they get too far out in front of themselves, the state electorate will slap them down and slap them down pretty hard. You saw that in terms of AB 5. That was the labor law having to do largely with Uber and Lyft a few years ago. They got it passed. Uber and Lyft put the referendum out there. The referendum cleared easily. And what it did was left the state without what it wanted to accomplish, which of course was to not let Uber and Lyft use these folks as contractors. Well, they lost that completely, but they managed to create absolute chaos in a bunch of other labor markets that they didn't intend to. So it was a train wreck. And they saw the same thing happen with the FAST Act that passed, a little over a year ago now, where, of course, they were going to have a special wage board that was just going to dictate wages and working conditions in corporate fast food restaurants. And yet again, the fast food chains went to the ballot. They saw the writing on the wall. They knew they were going to lose, and they backed off and created a side deal. I'd be really hard-pressed to see in this atmosphere the legislative body coming up with a big plan to add more taxes to the ballot. I don't. My guess is they see that as a loser. They're not going to make a lot of traction on it. So that leaves them with really two really bad options. One is to ignore it, and two is to cut back on their spending. They don't like those either, right? So there really is what I would call, at this moment, a lot of ignoring going on in Sacramento. Everybody's kind of doing I don't hear anything, I don't see anything. But at some point in time, they're going to have to confront this. And when they do, what they do about it, listen, the one thing I know as an economic forecaster is you never forecast what that sausage is going to look like. You just don't. What comes out the other end of that particular process, couldn't tell you. I think there's a bigger point here to be made. And that is that, it's easy to take this budget deficit and pretend that it is a reflection of something fundamentally wrong in the California economy, right? We see this happen all the time. I mean, there's a thing in the US called the CEO magazine. And every year they do a business climate survey where they ask a bunch of CEOs, what's the worst state to do business in, right? And every year for 20 years, it's been California. We're top of the list, the worst state to do business in. Yet, despite all that, we have the most expensive housing in the nation. We have an incredibly tight labor market. Wages in the state continue to rise faster than the nation overall. Output in our state continues to grow faster than in the nation overall. Our state has continued to be an economic success story. Now, again, none of this is apologizing for our business climate. We don't have a good business climate, but we have so many other good things going for our economy. We continue to succeed despite what's going on in Sacramento at some level. And I believe that this is yet again one of those circumstances. You shouldn't take this lesson as, oh, California needs to fix its business climate. Rather, the lesson to learn here is that California needs to fix its revenue system. And this has been something I've been saying for years and years. California, it's interesting. If you look at California tax revenues as a share of our state's income, we're not the top. Well, it turns out that the taxes we pay relative to the income we earn, we're not a high tax state. We're a higher tax state, but we're not a high tax state. Oddly enough, what's top of the list typically is like Mississippi. And that's because Mississippi has low taxes, but they have even lower incomes. It's a very poor state. Ergo, anything they pay is kind of painful, right? We're like 16 or 17 on that particular front. So we're not a high tax state. What we are is a stupid tax state, right? We have an incredibly progressive income tax system, which we all love. But then we have an incredibly regressive property tax system because of Prop 13. Again, that doesn't work. We have an enormous high taxes on goods, but we don't have a service sales tax, which again, doesn't make any sense. So what we need to learn here is that the entire revenue system needs to be rebuilt. And if you did it right, you could rebuild our revenue system, probably have more revenues available for these programs, and be a more business-friendly state at the same time. So that's the story that should come out of this, not that, oh, California's broken. Keep in mind, everybody says, oh, all these high-income earners are fleeing the state because of taxes. Maybe, but the reality is the vast majority of taxes anybody pays is to the federal government, not to the state guys. It's not, what you pay to the feds is much larger than what you pay to the state agencies. So, are you really lowering your tax burden by moving out of state? Maybe a bit, even like Texas, for example. I mean, what people don't appreciate, you go to Texas, Texas real estate taxes are really high. It's like 4%, 3-4% of current market value. And by the way, prices in Texas right now are going through the roof. So suddenly the tax burden on their local population is going up pretty sharply because of the increase in property values. So, you can't, nobody has a perfect system. Simple as that.